Big news is upending the crypto scene. Confirmed by leaked documents, BlackRock, the biggest asset management company in the world, has covertly registered documentation to start an XRP ETF. This disclosure is not only conjecture or gossip, it is supported by concrete data showing one of the largest financial actors on Earth is substantially depending on XRP's development. One cannot stress the consequences of this. This action can possibly change the whole scene of Bitcoin investments. By introducing an XRP ETF, BlackRock would transform the way investors access this digital asset and maybe send its price flying to levels many believe to be unachievable, $1,000 and beyond. We must delve deeply into the specifics, analogies, and underlying forces at work if we are to really grasp why this evolution matters so much. Keep tuned as we investigate XRP's prospective influence and future. Let us first pause to consider what ETFs have done for the cryptocurrency market, more especially for Bitcoin. These financial instruments have transformed access to and trading capability for cryptocurrency. The acceptance of Bitcoin ETFs signaled a major turning point in crypto from niche conjecture to mainstream investment. This change has given the domain of digital assets fresh credibility and acceptance. Millions of individuals and businesses may easily invest in Bitcoin using these ETFs, instead of negotiating the technical complications of wallets, private keys, or exchanges. This simplicity of access has transformed things. The price and market cap rise in Bitcoin following ETF approvals revealed exactly how strong this type of product may be in releasing demand and liquidity. It proved the great promise of controlled investment vehicles. With XRP, BlackRock is suggesting something akin to currency. We now also have to take Goldman Sachs's recent entry into XRP custody under account. This is a historic occurrence. Before XRP may be entered by institutional investors. To properly handle their possessions, they want safe compliance custody options. Goldman Sachs starting XRP custody services means that institutional players and big institutions now have a reliable infrastructure to keep and control XRP. This removes one of the main obstacles to major adoption and investment, trust, and security. The infrastructure to support significant institutional investment is at last gathering together with BlackRock's ETF filings and Goldman's custody solution live. Examining the changing balance of ownership between institutional and ordinary investors is another important aspect. According to recent statistics, institutions are fast amassing XRP and first exceeding retail holders in ownership share in years. Institutions typically have long-term assets, hence this change is essential, since it offers price stability and a basis for continuous development. By comparison, retail investors are sometimes more reactive and vulnerable. Deep-pocketed institutional investors' arrival marks a turning point in the XRP market and suggests a possibly long bull run backed by significant financial support. Looking at pricing estimates, some might find the $1,000 objective to be outrageous, but the underlying economic justification is convincing. XRP's value resides in its power to change the scene of worldwide payments. Though it is slow, costly, and antiquated, the SWIFT network today manages over $6 trillion in daily cross-border payments. Faster, less expensive, more transparent XRP presents a blockchain-based substitute. Should XRP's network start to record even a small portion of this enormous market, demand for XRP tokens to offer liquidity will explode. Escrow contracts combined with rising institutional accumulation limit circulation supply, so fundamental supply and demand economics could drive XRP's price far higher. Considering the expected transaction volume and liquidity requirements, reaching $1,000 is not only a fantasy, but also a reality that we cannot overlook regarding the regulatory environment either. For years, XRP's head has been covered in doubt. From Ripple's continuous struggle with the SEC, recent court rulings, leaked internal SEC records, and regulatory signals, however, point to a possible turn toward XRP obtaining more definite regulatory permission. Regulatory certainty is first importance for institutional investors. Many have kept on the sidelines out of legal grey areas or worries about enforcement policies. The leaked BlackRock ETF document at this point shows mounting belief that XRP will shortly be identified as compliant with US securities rules. This certainty will open trillions of cash, ready for XRP investment in a safe legal environment to be accessed. Already, changes throughout the financial ecosystem are being sparked by this institutional and legal impetus. BlackRock's action will almost definitely cause other asset managers, custodians, and financial institutions, including Fidelity, Vanguard, and State Street, to quicken their own XRP-related offerings. For XRP, this rivalry will set off a positive feedback cycle of liquidity, adoption, and market capitalization increase. XRP is the introduction of several ETFs, mutual funds, and custodial services will embed XRP deeper into the conventional financial world, therefore facilitating both regular investors and large institutions both in participation. One cannot undervalue the social and community element either. News of BlackRock's announcement has generated a tsunami of hope among influential experts, crypto forums, and social media sites. This more attention is essential since short-term price movements in the market often follow from mood. Thought leaders and influencers are contrasting this event with the early ETF news of Bitcoin to generate buzz that is driving more awareness and buying demand. Further institutional interest can be sparked by this social momentum, hence forming a self-reversing cycle of excitement and investment. For individual investors, this is a pivotal and fascinating event. Although the benefit, this is a pivotal and fascinating event for individual investors. XRP's upward potential is certainly genuine, but crypto markets are erratic and volatile. One should keep informed and monitor legislative changes, but with smart risk management and a long view, investors who set themselves strategically will be in. Ultimately, BlackRock's leaked XRP ETF disclosure marks one of the most important developments for XRP in recent memory, hence possibly altering the scene of cryptocurrency investing. Complementing Goldman Sachs's custody launch, which marks a turning point for institutional crypto adoption, the growing predominance of institutional